The next management on the show is MedPlus Health Services. Now, the last, this of course happened about a month and a half back, has deferred fundraising plans. It's also deferred its diagnostic division expansion for the time being. Well, let's get more details on this. We have Mr. Gangadi Madhukar Reddy, Managing Director and CEO at MedPlus Health Services with us. Mr. Reddy, great to have you with us here. Good morning. It's always good to speak with you, sir. Prashant this side. You know, before I get to the QIP and the diagnostics business, etc., I was reading a note. This was, I think, there was a conference here in Mumbai run by Investec, where I think you were there. And, you know, what I understand is there was a fair bit of conversation around your sort of a generic business, right? Could you talk to us a little bit about that? That's, you know, what's the scale and scope of it? You know, on the pharmacy side, what percentage of products by value that you're selling are these generics? And at a net level, will this be a big revenue sort of boost, or because these are generics, this essentially means lower profit margins? Go on, sir.
Sure. So anyway, before I even get to how we are doing, you know, I'd like to tell you that this process of genericization has actually been happening for a while. You know, as you all know, you know, 80–85% of what we sell, right? I'm sure it is true for the market too, but I can only speak for ourselves. 85% of what we sell today are all generics. They are just Me Too products, and they're sold by different brands, right? There's absolutely no difference in any of these products. If you actually look at it, it is less than 800 products, 800 actual molecules, which account for nearly 85% of our overall sales. Now, these are being sold under different names. You know, for the longest time, you know, customers did not know that these were all different. These are all the same. That has now changed, you know, quite significantly. A lot of people know about it, and a lot of people are, you know, the only reason that why they would pick one over the other is either because the doctor has recommended it, or because they're not too sure about the quality of the product which is out there, right? So that has been on. So the stage was set for someone to come in and basically say, hey, you know, I'm giving you the same product, and you can trust us on the quality. And as long as, you know, the quality is good, as long as you can trust us, you can actually pick it up, because we don't have any marketing or any other expenses. We can actually give you a huge discount. And the discount we offer is between 50 to 80%. So that has been resonating. I mean, the stage was set, we launched it, it's doing very well. To talk about the numbers, you know, given that we have just closed our quarter, I'll only tell you about what happened last before I
Mr. Reddy, just for our viewers, so these are MedPlus generics. So generics under the brand MedPlus, right? This is the differentiation as compared to other labels who are also selling generics. But this is your own brand, which you're selling at a big discount to some of these other labels, which are also generics. That's the offering here, right?
I just want to make one distinct clarification. Everything in India is generic.
Of course.
It doesn't matter which company sells it. You know, some say it is branded generic, some say it is generic, but everything is generic, right?
Yeah.
So now it is going under the MedPlus name. Yeah.
Yeah. So you were getting numbers.
50% discount compared to the brands.
50 to 80% discount compared to the other brands. Okay. Yeah. So you were getting to numbers. What does this mean at an overall level?
See, volume-wise, we're, you know, according to what we basically said in the last quarter, we were at around 12 to 13% of the overall volume, right? So if you look at the medicines only, it is more than 15% of all the medicines which we sell today in our stores is MedPlus.
Okay. No, so at a profit, but these are being sold at a bigger
discount. By the way,
yeah.
We actually make more money on these. It doesn't matter what the discount is. You know, while the top line realization is slightly lower because on an earlier price of 100 rupees MRP, we would give a 17% discount or 18 overall average discount, and we would realize 83 or 82 rupees. Today, we realize maybe around 40 to 45 rupees based on the overall discount. But the net realization, despite the fact that it is much lesser top line, is actually better in our own brand.
Okay, 15% of all the medicines that you sell is MedPlus generic now. That's the first thing.
Yes.
And you're saying this is these are at an aggregate level. This is the net realizations are higher as compared to selling other labeled products, even though the top line is much lower.
That's it.
And what's the aim? 15% goes to what, by when, and how fast is this ramp up happening?
See, it'll all depend on how ready the market is and all. We're just still testing it out. We are advertising it. We're talking about it and all. There's going to be some early adopters who have actually come in. The others are going to follow at a later date, the consumers. And on our behalf, we'll basically continue to educate the market. It's very difficult for me to tell you, Prashant, because we don't know. Honestly, this has not been done in the country in the past. I'm hoping that our competitors, when they actually also come in and launch the same thing, they'll validate our model even further, and more and more people will shift towards the generic side.
Okay, Mr. Reddy, hi, good morning. I want to talk a little more about the diagnostics business because there are definitely some challenges there. You folks at MedPlus have decided to defer your expansion plans in the diagnostics business. Can you tell us a little bit about what are the challenges that you're facing? Is it just a 1-2 quarter thing, or do you think it could be long drawn out?
See, diagnostics, as I've said in the past, is a completely new model. It's a majorly disruptive kind of model, works on a different level and all. It is extremely, let us say, sensitive to the number of subscribers. We wanted a certain number of subscribers by the end of last quarter and all. We didn't get those. We still think we're a little way away, maybe 3-4 quarters away. So we want to make sure that we get those numbers before we actually launch it in other places. But as a concept and as a product itself, it has been taken up very well. There is some delay. That's all I can say. But definitely the model works beautifully.
So you said on the subscriber issue, there is some delay that you're facing, but also on the pricing, are you seeing any kind of competition pickup? Because some of your peers, in this space, at least incumbents like Metropolis, etc., have raised prices recently, or in the past 1 year at least. What is the pricing dynamics like in the diagnostic space currently?
Metropolis is not a competitor, neither is Dr. Lal's to us. We are a fully integrated center which has radiology and everything else. So I would say the closest competitor would be someone like a Vijay or someone like that who's there in Hyderabad. So for us, the pricing or increasing or whatever of Metropolis will only affect us will only affect us positively, right? We are a value player. We give a 75% discount. We are already much lower than them, and if they decide to actually increase their price, then more customers will come to us. That has no effect on us at all.
Noted that point, Mr. Reddy. What about your QIP plans? You said you're thinking of raising some money by the QIP route, and that's been deferred. Tell us more.
Yeah. No, that's right. That's right. See, we really did not require too much money on the pharmacy side. Pharmacy is a self-sustaining model right now. We're growing nicely. We wanted to go and get some money to expand our diagnostic centers fast. But given the fact where we are in the subscription numbers and all, we decided that we'll actually wait for a while. Hence, to remove that doubt or whatever, we just withdrew it.
Okay, all right. So, got it. I just wanted to come back to the business, right? Can you tell us a little bit about the margin picture, overall margin picture for the company? What are you looking at? I mean, in Q3, your margins were at about 6.5%. Is there any scope to rise further?
We are in a silent period. I really don't want to talk about it. Things are going according to plan, I would say. That's all.
Okay. And your new store margins, just trying to understand on the new stores in terms of timeline, etc. When can one expect some break even? If you can just give us a trend on that. I don't want exact numbers, but just some ballpark figures.
No, I'll just give you a general listing out there. Typically, 50-60% of our stores break even in 3 months at the operational level, and around 75-80% break even in 6 months. That's the usual thing. It goes up or down based on the season and all that. But we have been tracking true to that. Nothing has really changed for us. The stores, though, become fully, they deliver the full EBITDA only at the end of 2 years. So in the process of ramp up, you'll always see a drag on the EBITDA. It'll actually not be a loss, but let's say the store level EBITDA is 10% at the end of 2 years. Half of them, more than 50-60%, 45% of the stores are below that. So you're going to see a slight, I would say, drag because these would be delivering a lesser EBITDA. That's all.
So in terms of number of stores, your plan was to add 600 stores in FY24. Are you on track to doing that? And what about FY25? What's the guidance?
No, as we said in the last call, yes, we are on track for that. Yes, we will most likely end up doing 600 stores, as I said in the last call again.
All right, Mr. Reddy, we'll let you go on that note. Thanks a lot for joining in. Appreciate your time here on CNBC TV 18.